So a lot of the negative and the Jackson Hole, I mean, everyone on TV, that I figured that was factored into stocks. What wasn't really factored in is him going a little bit higher on that rate. And, from 4.25 to over 4.5%, 4.6%, that's what they're predicting. But that's why I wasn't so surprised. That's why I said it's a good trade where you could see that happen, because any positive is just so much negative. That's what you're seeing right now. I mean, investors haven't been more bullish than this almost ever, or more bearish than almost ever, which normally signals, and there's, the sentiment guys and the traders are saying, the year after, when we've seen it this negative, it goes up 35%, 75%. And they're like, and they joke around and they're sarcastic saying, this time is different. This time is different. It is different. It's not the same. Okay. If you compare those other periods when we've seen this, we didn't have this in the face of rising interest rates with inflation back in the 1980s. And I hate when we see that, when people compare different time frames and they're saying, well, the P ratio, that's what we did. How many bears have gotten it wrong? And I'm going to cover this in a minute because it's very important. From 2010 to 2019, 20 into COVID, saying that, the P ratio is too high. Historically, we've never had rates at zero for almost 10 straight years, which promotes money into the system. It promotes growth. It makes you're an idiot if you keep your money in savings. That's the way the government made it. It's a different scenario. To compare that to 10 years, 30 years, and 50 years, it is different this time. It is different. We're in uncharted territory. And if you want proof of this, Daniel, this is what you have to realize of what happened, okay? It's important for you to realize this. And you're looking at Powell. Last year, he's been doing this for 40 years, Daniel. 40 years. Studying economics, theories, pretty much his whole entire life. Studying the boom and bust market, every recession, depressions. He studied it all. That's what this guy did. That's what you have the most head of the most powerful institution of the world that could destroy world economies or make them grow based on your policies, right? That's how you got there, right? So last year, based on your 40 years of experience, everything that you know, it told you that when inflation was at 5%, it was going to be transitory. That was your thesis on everything you've studied your entire life. And that's okay. You get it wrong, we get it wrong, and then we adjust. Okay, so you were wrong, and that's okay. That's the past. We know it wasn't transitory. Last year, we had zero rates. You were aggressively buying bonds. You just said that. It was funny, right? They mentioned that Wall Street Journal today. Yep. You pointed that out, right? We were saying that aggressively buying bonds. This is last year, a year ago, right, Jackson Hole? And you suggested, again, based on the 40 years of experience, 40 plus years of experience, that inflation is going to be short-lived. 1 year later, you fast forward to today, you just raised rates by the fastest pace in close to 4 decades. You're going to raise them by another 1.5% over the next 5 to 6 months to 4.5%. You're about to aggressively shrink your balance sheet, which is $9 trillion, by over $1 trillion annually, taking money out of the system. And now you no longer think inflation is transitory. Think about that for a minute, because you thought inflation was transitory with zero rates. Now we're going well over 4%, and you totally threw that thesis, again, which is formed from 40 years of studying economics, out the window. So if you look at this analysis, Powell is basically operating 100% in the dark. He's throwing everything that he learned for 40 years out the window, putting him in a position that he's not really qualified for. Because if you're telling me that you thought inflation was transitory when interest rates are zero and you were buying bonds, and now you're shrinking your balance sheet, you're aggressively raising rates by the fast pace in 40 freaking years, and we're already there, and you're seeing this. I mean, you're seeing across the board where semis are now warning, companies are warning, industrials are warning. It's not just FedEx and Ford and people looking at those two companies because those are big names. We follow all the companies. They're warning. 70% of these CEOs think of recessions coming if we're not in one. We'll get to that in a minute. But this about face, it's not like Nick Saban, which was one of the greatest coaching moves, I think, in history. He was an Alabama coach. He switched quarterbacks in the second half in the 2018 college football championship. So Jalen Hurts to Tua, which is great because those two guys are doing great now. But it was insane. It was an insane move because Hurts was 25-2 as a starter. He just had a bad first half, but he saw they didn't have it, right? This isn't like one of those, about faces. I mean, this would be more like Saban, like telling his entire team to sit down and taking 11 fans and saying, okay, here, you guys play Georgia, we got a better shot. That's how far, I mean, if you think about that of where we are, of how much he's going to overshoot, if you really thought inflation was transitory with zero rates and you're buying bonds, and now where we are right now, you're saying that it's no way close to transitory, meaning that you're going to stay well over 4% for the entire year next year? I mean, you know what the adjustment is going to be for us? I mean, it's insane when you think about it. And by the way, I just think it's hilarious. Dan, what's your definition of recession? What is a recession? Do you know? I don't know. I've been doing this for 30 years. I have no fucking clue what a recession is. What's a recession?
There we go. We couldn't even, Frank.
No, but I'm going to get fired up. If you don't like it, I like it. I'm trying to help you guys. If you can't ignore a curse word, ignore it. But this is what happens when New Yorkers get fired up. So go ahead. Tell me what a recession is. You define it for me because I don't know. I have no idea what a recession is.
Well, I have an old soul, Frank. So despite my age, I'm going to go with the typical definition of 2 quarters of negative growth.
Okay, that's the definition. If you open up, I
feel like you're luring me into something.
Webster's. No, I'm trying to figure it out because that's not defined as a recession because unemployment is good. But you know what's defined is 5 out of 6 quarters of negative GDP. Is that going to be a recession? Because that's where we're going. That's where we're definitely going. Yeah. I mean, if you take the 2 that were just negative, there's a good shot that this is going to be negative. This might be the only positive quarter we see. And the next 3 are going to be negative. At least negative. But that's not defined as a recession anymore. Why? Because unemployment, it's so low. It's so low. We're doing great out there. The economy is great, right? So the president says the economy is awesome right now. Well, when you look at the labor force, you always want to look at data and look more into it. Because the number of persons not in the labor force who currently want a job, you notice how they define that where it's kind of confusing, right? So it declined by 360,000 to 5.5 million in August, right? So this measure remains above its February 2020 levels. That's reported in the last unemployment number. And this is for August. So these individuals were not counted as unemployed because they were not actively looking for work during the 4 weeks preceding that number. That's 5.5 million people that don't have a job but are not in the unemployment figures. Now, put that in perspective. Right now, our rate is 3.7%, which accounts for about 6 million people that are unemployed. That gets us 3.7%. But 5.5 million other people are not part of that because they're not looking for a job. They could be working off the books. They could just be like, listen, I'm done. But you can't blame them because you were handing them freaking checks directly for not working, telling them don't work. It's fine. You guys are okay. All right. So when you're looking at the numbers and you're looking at the data and how they're calculated, I also broke down how the CPI is not going to come down in a year. If that's your gauge, if that's really your gauge that you're looking at, since rental income is 30%, and you look at shelter at 30% of that index, that's not coming down anytime soon. It's just not coming down anytime soon. So if that's your gauge, the Fed is serious and they're going to continue to raise rates. But on the recession front, you'd have to say we're in a global recession, but we're not. But even if unemployment, if you take that, an unemployment rate would be what? You're not going to take all 5 million of those people, but even half of them, you're looking at an unemployment rate above 5%, 5.5%. And less participation rate. So 3.6 is more like 4.6 now compared to, again, we have to adjust this stuff as more people come out of the workforce. Nobody wants to look at the data. They just look at a number and say, I don't even care how it's calculated. Oh, you asked 3 people if the market's going to go higher and that's it. 100% believe the market's going higher. You look at the survey, it's like they surveyed 4 people. And who are these 4 people? I don't even know their names. They're just on the street. They don't even, who knows? I don't even know if they're legal immigrants or not. I have no idea, right? That's just 4 people we surveyed. You don't know. You got to look at the data. But when you look at the data and you look at how everything's calculated, it's really insane here. But the definition is 2 straight quarters of negative GDP. If that's not good enough, wait till we see earnings because we're going to get negative earnings quarter. It's X energy. And I'm not just cherry picking energy. I mean, energy's profits were up like 1,000% or so. It's like some crazy number. It's like 600 something percent. And it accounts for a small percent. Now it used to be 2%. Now it's 4%. But strip out energy and you look at, I think it's the other 10 sectors of the S&P 500, and you're seeing earnings year over year fell 4%. That's a big number. But the recession thing, Daniel, I'm trying hard to figure out how it's defined.
And to your point, earnings have come down. I think, and not to put these words in your mouth or make this argument for you, but earnings have got to continue to come down. So before third quarter results start getting reported, we have to see some revisions lower, don't you think?
We're seeing revisions lower, right?
It's going to continue. I mean, they're not all set right now. I mean, you'll probably see more companies possibly warn going into that quarter, et cetera. What I do think, the reason I think the market, and again, I don't say this lightly, the only reason the market went down around 2% yesterday was because at least Fed Chair Powell acknowledge that some things were slowing. He mentioned housing a couple times. He talked about how it's not enough and how the Fed needs to see more signs and more data to back up the slowing of the economy and everything like that. One of the quotes that he said, Frank, which again, I thought would cause more selling pressure. He says, no one knows whether this process will lead to a recession or, if so, how significant that recession will be. This was in back and forth questions on regarding, hey, to your point, they keep pointing to low unemployment. The Fed, I think, Frank, is in no doubt going to just raise until something breaks. To your point, going into an election year, you have a slowing economy, you have a higher interest rates, you have inflation at 40-year highs, and now you're going to have Jerome Powell yesterday, reading between the lines, said that they have to push up unemployment even higher. They are okay with that. One of the questions, I think, even tried to break it down into numbers and said, are you okay with another million people if the unemployment rises to XYZ? That's another million jobs lost. Are you okay with that? Essentially, he is. And he has to be, because they are hell-bent on saying we have to get this. I was looking for the transcript yesterday, Frank. He's committed. I mean, if he follows through with what he says, then we really need to be defensive, because he's simply saying we cannot fail. We will get the job done. We have the tools necessary. We will stay on the track to do this. That means paying for stocks excessively in the short term. But to your point, something's going to break. Recession or depression is going to get thrown around. That's when they'll have to pivot, and it'll be forced, in my opinion, which means it's going to be volatile.
So let me ask you this question. We didn't rehearse this at all. Okay.
I like this.
What is your thesis for buying stocks right now?
Oh, there's very little to buy right now. It's more of a build a shopping list.
But even if you look, it's build a shopping list.
Yeah.
But even people who are bullish, I mean, what are they saying right now, right? It's like, it's if you're looking for a reason to buy stocks, and you look around, it's like you said, it's hard. But the thesis, any bull thesis right now, what does it revolve around? It revolves around
the Fed pivoting.
Yeah, the Fed pivot, which we know that,
at some point they're going to,
they're not
exactly,
going to pivot, right? I was hoping that pivot doesn't mean that you're lowering rates. A pivot can mean like, all right, we're just going to slow down. They're not slowing down, right? So that pivot's gone. That's out of the equation. But right now, the reason to buy stocks, the only reason, right? You could say sentiment indicators and trading indicators and stuff like that, and I get it, right? It's most bearish conditions, and you might see a pop again. That's a trading opportunity, which is probably going to be sold off, just like we just saw with this recent market, because you got the Fed there, and the Fed's raising rates and doing everything, whatever, buying and selling bonds. So anyway. You're looking at the thesis being that stocks have come down and they're cheaper.
Mm-hmm.
That's the thesis of anyone right now. Other than that, you tell me someone else is buying stocks, a reason why they're buying stocks. And they could say sentiment indicators. Again, I get it, trading opportunities, but those sentiment indicators were negative for the past 2 weeks as this market has come down tremendously. It keeps coming down before this Fed meeting and even now. That's why I said we could see 1,000-point increase if the Fed just hints at anything positive, just a tiny bit positive, which he kind of didn't, and wound up going down.